All right, fellow AMC stockholders, XMAX Trading here. Just want to go over some DD regarding market structure and how it relates to AMC stock and what we've seen so far. So if you haven't subscribed already, consider subscribing. Hit the like on the hit the like button and in the comment section, and let's get started. All right, so looking at market structure as it relates to AMC stock, I think this is pretty interesting. I found this on Twitter or the internet somewhere, but it was pretty cool. So stage one is accumulation phase. It occurs after a drop in prices, the process of buyers gaining control from sellers, which leads to a markup. So what, A right here? A, B, C, D, A, B, C, D, right? Segment of the uptrend. Early, so yeah, anticipate, analysis, participate by, exit long, and avoid the D part. Yeah, that's kind of cool. No bull parts, when you see some bull parts here. Alright, early accumulation beginning and transition from bearish trend to more neutral. Longer term moving averages are still declining, and the stock will cross above and below those moving averages. Many of these stocks will continue lower and should continue to be monitored for short opportunities. Very short term short opportunities, if anything. Mid accumulation, 1-2, bearish forces become more neutral as buyers methodically accumulate shares, which I think we're doing right now, right? Now, this is New Year's Day, 2022. I think the bearish forces have become more neutral in AMC right now. Still no signs of upward momentum develop. Late accumulation, higher lows will often develop. The stock is unable to penetrate a longer-term resistance level to create a higher high. Moving averages have flattened out as buyers slowly gain control. We know what that feels like with AMC. But I think that's where we're in, you know. All right, so let's look at the moving averages. We got the 21, the 50, the 200. Smooth SMAs, simple moving averages. So yeah, so moving averages at some point get overextended here, and then they start to cross back, right? So then it's on the 2 hour. I could go down to the 1 hour, I guess. Let's go back to auto. But yeah, I mean, you see here the price action starts to get above and then below, and then all of a sudden it rockets above. It's kind of a triangle formation here, I think. But anyway, so moving averages, it became support and not resistance, right? And then it crosses up. So it's above the 21 moving average. This is the 50. So it's above the 50, but sometimes below the 21. It gets above that. It's becoming short-term bullish, and then it gets above the 200. The 200 is the red one. 200, like, that's what Paul Tudor Jones uses a lot. And that if it's below 200, it's generally bearish. So it is above the 200 moving. Now it's like mega bullish here. Look at this. So those moving averages are very important, you know, for accumulation distribution. All right, let's go back. Early markup. Stock establishes a higher, early markup. Bullish phase of stock is defined by higher highs and higher lows, which we just saw. This is where you want to get long on breakouts, and after short-term pullbacks, rallies are innocent until proven guilty. Early markup establishes a pattern of higher highs and higher lows above a rising long-term moving average. Long-term as in a 200 move. For me, it's 200 moving day average, 200 SMA. These stocks show considerable upside momentum and should be monitored closely for short-term time frames for low-risk buying opportunities. Mid-markup pullbacks are rising above the longer-term moving average may become deeper, but these stocks are in the sweet spot of an uptrend where gains can come quickly. Upward movement is still present, but rallies may take longer to develop. Gains come more quickly, often at the expense of trapped short sellers. Trapped short sellers who have incorrectly bet against the uptrend. Yeah, that's what. This is the mid markup, early markup. Early markup, yeah, the bullish phase where the bull has his cojones coming out. And look at that, cojones going up into the peak. This might be an Elliott wave formation, you know, like you got the 1, 2, 3, 4, 5, right there. So yeah, I mean it's like 1, 2, 3. The third phase is the longest one. So I think it's like probably 1, 2, 3, 4, 5 or something like that. The short squeeze thing is kind of hard to analyze, but yeah, mid markup, boom, huge gap up there. Pretty amazing, guys. Mid markup right here, and also, I mean, also the mid markup phase here. You know, you got going above these moving averages. They became resistance. Now they become support. You know, so it's kind of cool. All right, so distribution phase. Boo! Distribution occurs after a prolonged price advance. Process of sellers getting control of prices, which leads to decline. You can tell from Fibonacci's too if it does not bounce off certain Fibonacci levels, it will collapse, and then it becomes a stepwise fashion, right? Boom, stepwise collapse. You know, buyers can't force a change. Early distribution, short-term moving averages begin to cross one another, indicates a confusion of trend. Many of these stocks will continue higher, so the shoot continues to be monitored for potential long candidates. With Fibonacci, you can kind of tell, in my view, not financial advice. Mid-distribution, these stocks become more neutral and should be looked at as correcting through time. Upside is still possible, but becomes less likely as interest from momentum traders shifts to more active issues. Late distribution, some of the shorter-term moving averages may be declining, acting as resistance, but the stock has not broken key support for an official downtrend. These stocks are quite vulnerable to decline. Yeah, if you can tell this thing's not going to reach higher highs, it's kind of like time to get out. Not financial advice. Decline. Bearish phase of the stock is where you want to be short. Looking to sell short. Fresh breakdowns from after short-term rallies have exhausted themselves. Rally attempts are guilty until proven innocent. These rally attempts are guilty. Guilty. Bears suck. Early decline. Stock first establishes a pattern of lower highs and lower lows before declining the longer-term moving averages. These stocks are beginning to show signs of fear and can decline rapidly. These stocks should be on watch list for short sale opportunities. Mid-decline. Rallies to the longer-term moving averages typically fail as participants lose hope in the rally and the reality of a declining stock starts to settle in. These stocks offer excellent short-term opportunities, but the late decline, downward momentum is still present. Declines can come rapidly, but so too can violent short squeeze rallies. Ooh, late decline, particularly after bad news is reported. A violent short squeeze rally, huh? Very interesting. Bearish. So the bearish downtrend you want to look at is ABC, anticipate analysis, sell short, C, exit short, D, avoid, and then you try to time it again. So I think that the distribution declined. DD. So yeah, you can tell distribution decline. Yeah, once it goes above 200 moving day average, dude, it's a goner for now. So look at all these moving day averages. So it kind of goes and then hyperextends. Maybe a short-term rally. Maybe this is a short squeeze rally they're talking about. Who knows? You know, like boom, boom, boom. And then still, we got above 200 here on the 1 hour. Below it again. Where are we? November. Oops. December. Still below the 200 moving day average on the hourly. On the daily, we are below it. But so we were still technically below the 200 moving day average before the short squeeze of January. Although we were above it in May. So I think that getting above it, look, these things are on a trajectory. If we can get above the 21 or the 100, we're kind of above the 21 on the daily. So 21 moving day average, simple moving average. That's the number of trading days in a month. I think is 21. And then let's say, so yeah, we're gonna get above. If we get above this, that's short-term bullish. If we get above this, and if we get above this, dude, I think we're gonna have more positive catalysts coming in. I mean, you look about the NFTs, GameStop, new movies coming out, 200 moving day average. If we did get above it briefly, and then we were sunk. They really tried to kill us there. Go down to the 1 hour. We're on a trajectory to intercept this. Okay, we're on a trajectory. Oh, this stinks. I mean, we found support, right? I mean, we have support. And then we have resistance. Maybe that's a flag of some sort. I don't know. We jumped up. Boom, boom, boom. It gets overextended, right? Reverses. Boom. Sort of like a cup. You know, well, they also send a lot of upside down head and shoulders too, you know. But let's see what the indicator is. On the log of the chart, stochastic. Longer than stochastic RSI. Yeah, I think we're due for reversal, and if we can get above this 200 moving day average, guys, I think it's not financial advice. I think it starts looking good again. End of the year, right? End of the year, you know, institutions are selling for tax reasons. They want to drive it down further so they can get back into it and reaccumulate. I don't know, guys. I think it looks good to me. So we have to have a long-term view of this, not financial advice. Long-term view. So anyway, guys, if you like the video, hit the like button, subscribe, leave a comment. I'll see you guys in the next video. See ya.